Yeah, welcome everyone. Welcome. I'm excited to come again right in front of your screen with something very special today and troublesome in the Forex market. Now, I want to share quickly and teach us why structure shifts are not always reversal, while the shift of structure are not always reversal. Most times when people see a shift of the market, the market shift, they tend to think that that is actually um, a change of structure, which is not always true, which is not always um, what it is, but it is what just a shift in the market. Now, for example, now look at what happened at this particular place here. Look at what happened at this particular place. Look at what happened at this particular place. There was a shift here. Now, there was a shift at this place, a little shift at that particular place. So there was a little shift at this place, which is not a major shift. Let me look at, yeah, look at this shift. Look at this particular shift. Now, what is a shift? In simple terms, when there is a break of structure of previous high or low of a trend, is actually a market shift. Now, look at this. There was a break of this support to this point here. So this is actually what a shift. It's actually a shift of what? Of structure. As simple as that. I don't want to make things complicated. Now, once there is actually a break of low of high of a trend, is actually a shift. Now, let me look for another shift so that we have understanding. Wow. Let me look for another shift so that we'll have understanding. Because this is actually what we call the fake breakout. Okay, look at this. Ah, why is this thing? Okay, let me on my data. Just saw it. Since I have gone far, but we'll still see it. Okay, yeah. Look at another break here. Look at another break at this particular place. Look at here. Now look at the previous. If you look at it now, this is the previous. This is a previous. This is a previous level, and then there was a breakout at this particular place downward here. Look at it. There was a breakout. Now this is actually a structural word shift of structure. Now, not all shift of structure are reversal, like we just saw here. An example here is actually a break of structure, but it was not a reversal. In fact, it forms later on forms an area of support, and then we saw it going continuing the trend, which is the buy trend. Now, shift is actually a force breakout. Shift is actually a false breakout that tends to deceive traders and retail traders that um, are eager to enter the market, signaling them that there is a reversal, which there is not. You get it? Which there is not. It's not the reversal. It's just to deceive traders. It is deceptive in nature. Now, I want us to understand that traditionally, a shift or a structural shift, either uptrend or downtrend, is actually a signal of what? Of new trend. is actually a signal of new trend. But all of these are not signal. There are some that are not signal. Few are signal. Now, this implies that the market will continue forming that's lower high and lower lows. That's if it is for a downtrend. But if it is for a uptrend, it will be forming lower lows. If there is actually a true market shift. For example, now we have been going for a buy. I've been going for a buy. I've been going for a buy, and then here comes a market shift. Then see we have been going for a buy, and then all of a sudden we begin to go for a sell. What is now the sell now? To confirm that we are actually experiencing a market shift. No, we have been experiencing lower high and higher high because we are in an uptrend going up like this. Now, all of a sudden, we began to experience what? Higher lows and lower lows. Higher lows and lower lows going down for a second. Now, that is a pure and a clean change of structure. Put it at the back of your mind. That is a clear and a pure change of structure. Now, guys, there's what we call the liquidity sweep. A liquidity sweep. Now, liquidity sweep is actually the deception that happens so that traders, especially our institutional traders, can get more contract. Now, this often appear to be a structural shift, which is not actually a structural shift but a sweep of liquidity. Now, the market briefly break significant high or low, only then you will see a drastic reversal in the market. For example, you see there was a breakout here from top to down, and after the breakout, we saw price returning up again, price returning up and continuing the trend. You see price going up, continuing the trend, because this is what we call liquidity sweep. Now, notice what happened here. You see that it gives a support here, confirming the support. Now, a verified support with a long wick. Now, saying that this particular place is a strike zone. Is a strike zone. This particular place is a strike zone. Now, this is a sign that it's actually a strike zone. So after coming here to strike this particular place, it continue the trend. Guys, if you have not subscribed to this channel, do well to subscribe at this point. I know you have been learning a lot from our channel, and I want to appreciate our new subscribers and returning subscribers. Your presence has always been felt because I see your comment, I see your likes, I see that you have been improving in your trading, especially those that are in my community. I'm seeing drastic changes, improvement, and etc. happening in your trading career. I'm so excited that you are actually learning. So, guys, if you have not subscribed to this channel, do well to subscribe. Click the notification bell so that you'll be notified whenever I upload a video such as this, and you will not miss any video, any upload, any training that I'm doing now. Now, if you have done that, thank you so much. Let me keep on teaching us. Now, how can we now notice and identify this structure shift that will not make mistake in our trading? How? Now, you need to, number one, the major thing that you need to trade with context. And when you are trading with context, I mean you trade the trend. Now, the context here we see is what is uptrend, which is trend, bullish trend, uptrend. Now, you need to trade with what along the trend, which is what context, the context of the trade, and you need to focus on higher time frames. 1 hour time frame, 4 hours time frame. You need to focus on higher time frames so that you will understand when there is actually a shift of structure, and when there is actually when it is not actually a reversal, when it's not a shift of structure, because shift of structure is reversal, and when it is not shift of structure, it is what? Sweep of liquidity, or liquidity sweep. Now trying to get more contract to get money from retail traders. Now use what? Higher time frames. You see, I'm on 1 hour time frame now, analyzing. I'm analyzing. Look at what happened. Look at what happened here this week. Look at what happened this week in Euro USD. There is no way. There is no way. If it's showing you a liquidity shift in the lower time frame, that you believe it. Now, why I say so is because in the higher time frame, it's still telling you that we are what? Selling. That's bearish movement. It's telling you that we're sharing, we're selling. So you use the higher time frame for you to be able to understand this. And then don't forget, um, while you focus on the context and the time frame, there are two things for you to actually put in mind. The first is the area of demand and what? And supply zone. Now this area of demand and supply zone help us a lot, especially now. Look at it. Area of demand and supply zone. Now this is our area of this is our area of demand. This is our area of demand, and this is our area of what? Supply. The down is area of demand, the up is area of supply. Now look at it. Very clear. Very clear. Area of demand and area of supply. Now, anything revolving when you go to a lower time frame, anything moving along this, you will know what to do. Now, this is our area of what? Demand. So we are expecting the price will what? Will buy back. But this is our area of what? Area of demand. Is our area of demand. And then here's our area of what? Supply. You see it, our area of supply. Area of supply. Now, you need to understand the context of demand and supply. Now, demand and supply, to an extent, is not support and resistance, though it is related to support and resistance. Now, support and resistance can be a position, can be, let's say, let me use horizontal line. Now, this can be area of what? Resistance, while this particular place is area of support. Now, area of support, while demand and supply has to do with the last candlestick, the last candlestick that bring about the demand or supply of a commodity, or of an instrument. That is it. That's why I had to draw this at this particular. Let me go to 1 hour. You see, at this particular junction, I had to draw it at this particular place, because that's the candlestick that brought about what? The demand, the buying. Look at it. The candlestick that bring about the buying, and then the candlestick that bring about what? The selling. Now that is what demand and supply. If you don't know, I have videos on demand and supply, support and resistance. Now you can actually watch it. It will help you a lot. And then once you have understand this, you look for imbalances. Now, what are imbalances? Now, an open unfilled price range that acts as a magnet drawing price back to fill it is what? Is an imbalance. Now, I think there's an imbalance in this place. There is an imbalance. Yes, there is a look at imbalances here. Look at it. There is a gap here to be filled. This is this week gap, this very week. This is October 6th. This is a recent video. So this is Euro JPY. These are imbalance. Now price, no matter what price do, price might come back here to balance up. So look at imbalances when you are trying to understand market shift of market structure. Look at imbalances. After you have looked at imbalances, you can then be able to trade the market. Because if there is imbalance here, you will definitely know. This is actually selling. This is actually selling, and then all of us it went up for a buy, and then it continued. Now this is an imbalance, which means that this market have the tendency of still coming back to begin to sell back in the coming week, because it is an imbalance. So understand this logic, please. Understand this logic. Thank you for watching this video. Once again, I appreciate you all for watching the video. And if you have not subscribed to this channel, do well to do that. Click the notification bell so I'll be notified whenever I upload a video such as this. Thank you so much for watching this video. Give me a comment, give me a like, and I appreciate you so much. See you in the next video. Thank you for watching this video. Do like, share, comment, and subscribe to this channel for more information.